What is the strategy? The strategy is simple. You start with a higher time frame, the monthly time frame, weekly time frame, daily time frame. See where you are at in the market. Are we at the top of a market or are we at the bottom of a market? We find areas of supply or areas of demand. We then scale into the lower time frames like the 4-hour time frame or the 1-hour time frame, and we look for a Wyckoff schematic. At the bottom of a market, we look for a Wyckoff accumulation. At the top of a market, we look for a Wyckoff distribution. Once we see a Wyckoff distribution take place, we wait for a change of character. We wait for an engulfing candle to break the last structural lows, okay, within that lower time frame. Once we see the break of structure within the lower time frames, we mark it out as a break of structure or a change of character, with hopes that it leaves a clean level of unmitigated supply or unmitigated demand and an unmitigated order block. Once we play out the market and we wait for a clean break of structure, we wait for a retest of the unmitigated order block. We place our entry on the touch of the order block and we place our stop loss above the order block. Once price taps into our area, our POI, our point of interest, we expect either a meltdown if we're looking for sells, or we expect a rally if we're looking for buys. Okay, and that is as simple as it gets. Where do we take our profit? We take partial profits at the first point of major liquidity. We look for equal lows in the markets or equal highs in the markets, and then we let the rest run into areas of major supply or major demand on the higher time frames. And that is simply the strategy. We wait for Wyckoff accumulation, wait for a change of character, break of structure, an unmitigated order block. You enter based off of the order block, take partial profits at your first point of liquidity, and you let the rest run into major points of supply or demand.